Hello everyone, welcome to Inconvenient Truths. I'm your host, Jennifer Zeng. In the past few days, the dramatic events surrounding Didi Chuxing, the Chinese version of Uber, have caused a lot of attention, especially among Wall Street investors. Its share price suffered a free fall only a few days after it went public in New York. Its IPO, which means initial public offering, was one of the largest in the US over the past decade and the biggest by a Chinese company since 2014. So what on earth is wrong with Didi and what can we learn from it? Today, let's talk about this. Before we move on, please make sure you subscribe to and share my channel if you haven't. If you have any comments or questions, please type them in the chat box. I will try to respond to some after I finish talking. Now, let's give a brief introduction of Didi first. Let's show a picture. Yes, this is the logo and the banner of Didi at the New York Stock Exchange. I guess they put it up on the day when Didi began trading there. That was June 30th. Didi, in short, is the Chinese version of Uber, a ride-hailing company. It is headquartered in Beijing. It has over 550 million users and tens of millions of drivers. It was founded in 2012 by Chen Wei, who had worked for Alibaba and Alipay for 8 years. 2 years later, in 2014, Uber also officially launched in China. However, after only 2 years, in 2016, Uber China was squeezed out of China by Didi. It sold itself to Didi for $35 billion, and in exchange gained 5.89% of Didi and some 17.7% economic interest in Didi. The transaction also provided Didi with a minority equity interest in Uber. So this transaction was once called a win-win deal. Didi has some very powerful shareholders and investors. In 8 years, it had attracted $21 billion investment. With so much money, it has been spending very aggressively to expand its market share. It did grow very fast and gained absolute domination in the Chinese market. However, it had always been running at a loss. By 2019, in the 7 years since its establishment, it had lost 50 billion yuan, that was about $7.72 billion. It only started to claim that it had made some profit as late as May last year. Then, through its IPO in the US, it raised $4.4 billion, giving it a market value of around $68 billion. Then, only 2 days after it went public, the Cyberspace Administration of China ordered app stores to remove Didi due to serious violations of laws and regulations regarding the connection of use of personal information. New users cannot register either. Alipay and WeChat, the most popular payment app in China, have also suspended Didi to new users. As a result, the share price of Didi plunged sharply on July 6 after the market reopened following the Independence Day holiday. Its market value as of yesterday fell to $57 billion, down from nearly $70 billion the day it went public. So, this is to say the US investors have lost 13 billion in just 5 trading days. The share prices of many other Chinese companies fell too because of Didi. According to Bloomberg, China's technology giants have seen a combined $823 billion US dollars wiped from their market value since a February peak, with Beijing's expanding crackdown on the sector fueling investors' concern that the sell-off is far from over. The latest news is ByteDance has abandoned its plan for New York listing after the Didi crackdown. Okay, that's a brief summary of the events. Next, what on earth is happening? There are several possible reasons, and I will talk about them one by one. Number one is the power struggle within the CCP. It is widely known that Liu Qing, or Jian Liu, the president of Didi, is the daughter of Liu Chuanzhi, who is the founder. Let's see a picture of Liu Chuanzhi. Yes, this is Liu Chuanzhi. He's the founder of the naval company, which, let's show pictures. Yes, this is the picture of the naval. It has a very strong military background. Also, Liu Chuanzhi has a good relationship with Alibaba's Jack Ma and was also one of the founders of Wuhan University. Let's show picture 8, yes. This university was forced to change its name a while ago when Alibaba was being cracked down on and Ant Group's IPO was hauled. Didi's shareholders include many national level giants such as Bank of Communications, China Commercial Bank, Poly Capital, China Life, China International Trust Investment Corporation, and Ping An Insurance, etc., each of which has one or more powerful red families behind it. In addition, Didi also has investment from Boyu Capital, Sequoia Capital, Hill House, and SoftBank, all of which are private equity giants. Please note that Boyu Capital was founded by former CCP head Jiang Zemin's grandson Jiang Zhicheng. In other words, Didi is basically a huge platform supported by the CCP's heavyweight red families in conjunction with international capital giants, with Liu Qing as a front person. Hong Kong businessman Elmer Yuan said to Chinese language media Vision Times that Xi Jinping is cracking down on Didi and Ant Group to deal with Jiang Zemin's faction that is behind Didi and Ant Group. Although on the surface Xi Jinping has messed up a lot of things, he himself didn't lose anything, as he is only destroying the Jiang faction's fortune. Yuan said he once did business with Xi Jinping's brother, so he knows that in the business circle in China, when Xi Jinping's name was mentioned, people treated him as an outsider. In other words, although Xi Jinping has managed to gain control over the military, he has never grasped the economic power. Jiang's faction still controls the main big businesses in China and is especially strong in Guangdong Province, Shanghai, and Shenzhen. Yuan also said Xi Jinping is learning from Mao Zedong and adopting a Cultural Revolution-style power struggle to fight against Jiang. So his cracking down on Didi and Ant Group only hurt Jiang's faction, not himself. Yuan said Didi and Ant Group have not only Jiang's faction but also Wall Street and American investment companies behind them. These forces have strong ties with those powerful guys and the Davos World Economic Forum. So they won't be targeted passively without doing anything and are trying to convince the Biden administration to force Xi Jinping to step down so that they can continue to make big money like before. Also on this Tuesday, there was another very strange thing in China. The General Office of the Central Committee of the CCP and the General Office of the State Council issued a document called opinions on strengthening the crackdown on illegal securities activities according to law. Usually, the security industry is regulated by China's Securities Regulatory Commission, but this document was issued directly by the central government instead of China's Security Regulatory Commission. Article 19 of the document says, and I quote, "Data security, cross-border data flow, management of confidential information, and other related laws and regulations should be improved. Provisions on strengthening the confidentiality and file management related to the issuance of securities and listing aboard should be revised. The main body that is responsible for information security of overseas listed companies should be identified." Unquote. Article 20 of the document says, quote, "Strengthen the supervision of Chinese stocks, take effective measures to respond to the risks and contingencies of Chinese companies and promote the construction of relevant regulatory systems. Amend the special regulations of the State Council on the issuing of shares aboard and listing of Chinese companies. Clarify the responsibilities of domestic industry authorities and regulators, and strengthen cross-sectoral regulatory coordinations." Unquote. Both Article 19 and 20 are under Chapter 5 of this document, and the title of Chapter 5 is, quote, "Further strengthen cross-border supervision and law enforcement judicial collaborations." Unquote. Given this document was issued only days after Didi went public and right after the CCP's crackdown on it, it is very obvious that this chapter and articles were crafted especially for Didi as well as Chinese companies listed overseas. Why would the CCP central government bypass the China Securities Regulatory Commission and directly issue such a document? It shows that Xi Jinping is very unhappy with the China Securities Regulatory Commission, which failed to stop Didi from going public in the US. We can just imagine how fierce the power struggles are behind all those. Well, that's the number one reason. The number two reason is the battle over data control inside China. We know in this big data and digital era, it is very important for the CCP to have absolute control over the data to practice its digital totalitarianism. The CCP's media once vowed no internet giant should be allowed to become a super database of personal information of Chinese people in greater detail than the state, that is, than the government. So the battle over data control has been going on for a while. That's why other internet giants in China, such as Alibaba and Tencent, were also fined $500,000, that is $77,000 only yesterday. And in April, 9 internet companies were punished. Each was fined $500,000 too. The number three reason is also about data control, but it is the control outside of China. There have been rumors that Didi was forced to hand over to the US its user data as well as data of Chinese maps, including detailed information of some sensitive places such as military buildings. Some Chinese netizens are calling Didi a traitor because of this. Didi has denied this allegation. I personally don't believe the US would require Didi to submit this kind of information. However, when the US-China rivalry is getting worse, it is fully understandable why the CCP would be very worried that the US would obtain data through the listed companies, just like the CCP had forced the US companies such as Yahoo to hand over its user information to the CCP. Apple was also required by the CCP to set up its cloud center in China and keep Chinese users' data inside China. So the CCP is worrying that the US government can do the same. The number 4 reason is secrets leaked via the listed companies. The US authorities are now having stricter audit requirements on Chinese companies. As a result, the huge networks behind the listed Chinese companies could be exposed, and those networks involve all the top CCP figures. The CCP doesn't want to have that happen. Also, the public companies are required to release financial reports regularly. Through those financial statements, some of the CCP's secrets can be leaked too. The CCP doesn't want the public, especially Chinese people, to know too many things about the listed companies, especially who actually owns those companies. Inside China, everything can be pushed underneath the table or concealed inside a dark box. But once the companies submit their shareholder and operation information as required, things can go out of control. The number 5 reason is that while Xi Jinping just vowed to have the foreign forces break their heads and shed their blood in front of the Great Wall of Steel made by the blood and flesh of 1.4 billion Chinese people at the CCP's 100th anniversary celebration on July 1st, Didi is embracing the US capital. That doesn't look good for Xi. The number 6 reason is that Didi went public against the CCP's advice. According to the Wall Street Journal, the CCP had suggested Didi to delay its US IPO and to conduct a thorough self-examination of its network security, but Didi didn't follow the CCP's advice. So this must have angered the CCP as well. So we've seen the short-term consequences of the CCP's crackdown on Didi. That's the sell-off of not only Didi but also other Chinese companies. But what will be the long-term consequences? Tao Rui, a former Harvard University scholar, said this on his Twitter: "The Didi incident is a big historic event that is no less important than the Hong Kong national security law event. The stock market is in panic. China's major technology companies lost a staggering billions, trillions of dollars in market value in just 2 days, dragging down the entire US stock market. The CCP doesn't care about whether the confidence of international investors about China will be destroyed. It is a symbolic event that the previous national strategy of focusing on economic construction was shaken. China will go back to the era when they claimed that the grass of socialism is better than the crops of capitalism. The CCP is trying to safeguard its regime at any cost. This means that ideologically, the CCP will be just like North Korea. In order to maintain its power, it doesn't hesitate to destroy the economy. This is a historic moment. After this, China's economy will gradually go into the internal cycle. Ideology is above all, and economic construction as the center will become history." Well, that's his comment. So what is the lesson to learn here? In science, we have a term called system error. When there are system errors, no matter how you use this instrument to measure something, you will always get wrong results. Despite the fact that China or the CCP's China has never respected or followed international rules or norms, governments, politicians, Wall Street, and other elites all pretend that the CCP is part of our civilized world and give it all kinds of licenses for it to do evil to the world. It is true, many people did end up making a lot of money by working or doing business with the CCP, just like what former CCP head Jiang Zemin said, making big money without making any noises, or making big money quietly. In Jiang Zemin's era, many Westerners did make a lot of money, together with Jiang's corrupt family members. So there was a term to refer to Jiang's way of governing the country, that is, governing the country while corruption. All CCP officials and their partners in the West corrupt China together to make big money. Who cares about anything else? Without the investment from the West, the CCP would have gone bankrupt long ago. After Xi Jinping came to power in 2012, he initially did manage to arrest a lot of corrupt CCP officials and had won some support from the public. However, at some stage, he somehow felt that he needed to keep the CCP to keep his power, and thus made some kind of compromise with Jiang Zemin's faction. So his anti-corruption campaign ended halfway through, and he turned to the left to seek legitimacy. He doesn't realize that it was him who is sustaining the CCP, not the other way around. If he had had the courage to abandon and disintegrate the CCP several years ago, perhaps he would still have had some chance to save himself and his power. But now, I think it is too late for both him and the CCP. He is indeed the chief accelerator who is accelerating the CCP's demise. Do you agree? Okay, that's all I plan to say today. Any questions or comments? Let me check. Okay, so here is a comment from Mac Morgan. We in Australia are awakening from our stupor. All Western democracies have to wake up, decouple and stop financing the regime. History will judge us very poorly. Yes, I totally agree with this comment. And Sakaras said the COVID-19 should wake us up. Yes, I think so. I'm unable to comment. Oh, sorry, I think you should be able to comment because I saw this comment of yours. Are there any questions? Let me check. Seems we don't have any questions now. Okay, maybe we wrap up here. Let's see you next Monday. Bye.